Apple had a shareholder meeting on February 27th, and I think the takeaway is that the stock has another couple of months of rough weather ahead of it. The big contention at the meeting was whether Apple would do something with its big cash position to make investors happy in the short run. David Einhorn, an activist investor, had argued that there ought to be a big distribution or a split or preferred stock that would use some of this cash. The whole idea that I think Einhorn was representative of, and it's not just him, lots of people on Wall Street feel this way, is that now that Apple's stock in terms of price has hit a pothole or a downdraft, depending on how big you want to think this is, that Apple ought to be doing something in the short term to make people happy. And that would include a larger dividend or some other kind of shares that they could get some of that cash back now while the stock price isn't doing anything. Not everybody agrees. CalPERS, the big California state pension fund, said basically they wouldn't vote for any of this because they're looking at Apple as a long-term investment. They don't need the cash in the short term. It doesn't do them any good. But I think this contention, as well as the general feeling on Wall Street that Apple needs to do something with its cash to make people happy, means that after the meeting, there are a lot of disappointed people out there because Apple didn't do anything clear-cut with its cash. Company basically said, well, we're considering very actively things to do with our cash. I don't think that's enough to make anybody happy. So what we're really looking at is Wall Street, which is disgruntled that the stock is down. Wall Street is disgruntled that Apple hasn't done anything with the cash. And Wall Street is sort of starting to go, well, what's your new product? What's your new product? What's your new product? And Apple, as it usually does, is saying, well, we're not going to tell you quite yet. All that means, I think, that in the run-up to first quarter earnings in March, we're looking at continued volatility in Apple, continued downward pressure on the stock. If you're looking to find a bottom in it, 450 or so looks like a decent bottom, 440. But I certainly wouldn't count on it going up, and might even be able to get it cheaper than that over the next few weeks. This is Jim Jubak for Jubak Asset Management.